Hey guys, welcome back to another video, and today I'm here to show you why investing in the stock market, especially these few stocks, is the easiest way to get rich. So before we start the video, be sure to like this video, subscribe to the channel, and also leave a comment down below if you guys enjoy what you're seeing. If you want to see something else, I'd really appreciate it. I appreciate all the support, and yeah, let's get into it. So this video, I'm here to talk about why investing into the stock market can potentially cause you to become very wealthy. We can take a look over at a stock market calculator. So let's see a stock market calculator. This is one I like to look at, investment calculator on calculator.net. Let's see, just in my position right now, I have $14,000. Let's say over the next 5 years, I'm investing, we'll say the market average is 10%. I invest $500 at the beginning of every month. Just in 5 years, I have $61,000. And then this is when compound interest starts to take off. In 10 years, I have $137,000. And then let's say I start young. Me personally, I'm 19. So let's say I want to have this money when I'm 79. That's $9 million. And it only goes up from there. Let's say I increase my additional contribution. I get a job, a well-paying job, and I'm able to, deposit $5,000 a month into my portfolio. $75 million. That's an unfathomable amount of money, right? And then we can see right here, let's say I also outpace the stock market in returns, then I'm in the, I'm almost in the billionaire club at that point. So that's what we want to talk about today. It's a lot easier, I think, for the average person to pick the right stocks and outpace the market than it is to contribute more money on a month-to-month basis. So that's why I want to talk about the stocks that I think are going to outpace the market tremendously. Honestly, all time, but especially for the next 3 to 7 years. And they're at a very attractive price now. Amazon is down 12% in the past month. Year to date, it's down 10%. This great company that was actually up almost 10% year to date is now down 10% year to date. It's under $200. So this is a company that I think is, I need to build my position even more in my portfolio, but this is one that doesn't have, I don't want to say it has no risk, but there's not a lot of risk with this company. It's growing very well. They provide a lot of jobs for Americans. Their P/E ratio is 35, which is very well deserved. They have a $2 trillion market cap. This is a company, you can just take a deeper dive into the financials if you guys want to. But they're growing quarter over quarter. They've beat earnings the past 8 quarters. I don't think they're going to slow down anytime soon. And if something happens with Amazon, something bigger is happening in the market most likely. So that's why Amazon is a sure bet. I made a video actually about it recently. Meta, don't have much money in it at all right now. Should have put a little bit more in when I first invested in it, but I'm gonna build my position to the thousands of dollars over the next couple of weeks. But right now I only have $100 in here. Average cost of $600. That's funny. It's more than the money I have in here. But you can see this one 2 year to date. They're only up 5%, but past 3 months they're down 1%. They opened pretty well in the beginning of the year, but you can see past month they're down 13%. And Meta's a joke at 25 PE. This is a company that should be way more. They have the largest advertising agency. They're $1 trillion market cap. They beat earnings every single quarter, just like Amazon. We see that in these amazing companies. They smashed earnings last quarter. Look at this. They're fair value by Morningstar, which I personally agree with a lot. I think Morningstar is a great analyst over there. Their fair value is $770 for this company. So I think, in my opinion, that's very true, and that's going to happen very soon. I think over the next couple of years, I wouldn't be surprised if this company, next 5 years, they hit $2,000, at least $1,500, I think. So yeah, I'm feeling a 3x with this company over the next 5 years, which would very well outpace the market. That is a very, very good return at 3x in 5 years. But another stock that actually did very well today that I suggest, you guys purchasing, which is my biggest position. I'm down right now actually, but had a nice little bounce back today. Almost $6,000 invested in AMD right here. AMD is a microchip company. Their main competitor is Nvidia. They're a fraction of Nvidia's market cap, and I don't think it's going to stay that way for long. Their PE is very high right now. I don't think that's quite accurate. But we can see that, this company, that they're meeting earnings, they're beating earnings. They're not in a hard spot right now. I mean, they're very well positioned for share gains in CPUs and capturing a piece of the AI pie by Morningstar. This is another one that Morningstar agrees with. Yeah, their economic moat is narrow, uncertainty is high. This is a more risky type of stock, I'd say. I don't think it's that risky personally, but I think that definitely compared to Amazon and Meta, it is a riskier type of company. But this is one that, if you have a couple spots in your portfolio where you want to hold the stock that could shoot up to the moon and doesn't have a huge chance for going much lower. I mean, look at what it's done the past 3 months. We're down 22%, down almost 20% year to date. The company's been cut in half in the past year. I think AMD is a pretty sure bet right here. And yeah, I mean, those are my main, those are my main three personally. I also think that Elf is a great company. Have a lot of that. I think that's more of a different story. Elf, I mean, you can see they're a smaller company. They're also a fraction of the market cap of the three companies I just talked about. They're even, almost in 100th, or they're probably a 50th of over at AMD. So, I mean, yeah, Elf is definitely not as big as one of those companies, but you can see the way that they've dropped. They've dropped almost 70% over here in the past year. So, I mean, from their peak, they've dropped more than 70% in the past year. So this company really got hit hard. They're a makeup company. They actually lead the sector in growth, and they've beat earnings every single quarter continuously. I think I'm not sure how many consecutive quarters exactly, but they're tied up there with NVIDIA for most consecutive quarter beats. And them two are the only companies that have beaten earnings, that many quarters in a row. So this is a company that is very, this is a company you want to get into. And then another one, one of my favorites here, Celsius. I need to build my position even more in this, but Celsius is also a great company. They spiked actually on earnings recently. They hit a high of oh no, it's actually not on here, but they hit a high of around, I think it was, it was up here. It was around $33, 34 maybe, because they did announce that they're going to be buying another energy drink brand. I'm not too sure what the name was. Oh yeah, Alani Nutrition. They're actually buying that energy brand. A very strong female demographic with that one. And yeah, I mean, that was a great acquisition for the company. A lot of people think it's going to do very well. Great buy. We can see the fair value here is $32.50, kind of close to where it's at right now. But yeah, the uncertainty is very high with this one. I agree. This is more of a risky play. That's why my position is not nearly as big in this company. Only because, I mean, we can see this one has actually gone down, I mean, from its peak right here, we're down 80% almost. So yeah, this is one that's down a whole lot. All time you can see it's another great company, but this one's down a lot right now. And I do believe in the business model, and as you guys can see, I mean, that's my investing strategy. I buy these companies that are down. I mean, this is another example, is SoFi, which already kind of started to do what I thought it would do. It's dropped a little bit right here, but we can see my average cost is $8. I've averaged up since then, but I was buying for $6 down here, and then, I mean, it started, people were like, wait, this company's too cheap. It hit around $18. I think the high, 1842 was the 52-week high, so that was, I was up a lot when it was at 1842, and now it's kind of calmed down a little bit. I think I was up 200-something% at one point. But yeah, now it's calmed down a little bit. We're, kind of back at a decent price to buy, in my opinion. $12 for this company is very fair value, and I'd buy more shares. I actually bought more yesterday when it was down 10%. And then another company that I really like is Nike. Have a slightly bigger position in this one. I've been holding this one for a while now. We can see this one, down 26% past year. Past 5 years, Nike's, it was up. I mean, if we go past 3 years, it doesn't have this on Robinhood, but we can see it was up 116%. Now it's down 10%. So yeah, this company's down a lot too. I mean, but you can see all the time. Every time Nike's fallen a little bit, it's bounced back up. But 2021, it hasn't recovered. So, and I don't think, when I think of stocks not recovering and Nike, I don't usually put the two in the same sentence. I think Nike is a stock that is going to recover. I don't think that was their all-time high for this company. I think the swoosh is still still very popular, and I think Nike is not that's not the end of Nike. I mean, look at right here, the 5-star on Morningstar, economic moat wide, uncertainty medium, and then stewardship exemplary. and their fair value, they have it at $112. So yeah, that's almost double what it's at right now. And Nike pays a very, very nice dividend right here of 2%. So I don't see why you wouldn't buy Nike at this price. It doesn't really make much sense. And then I have a few smaller holdings here, just a little bit of speculative plays. But I mean, for the most part, that's my whole portfolio. I do have some Cake. Actually, I believe in this company a lot too. They have some restaurant brands that they're just trying out. Actually, like North Italia and Flower Child, and then a lot of concept restaurants where they just have one or two locations, and they're just seeing how those go. This is a stock that's actually returned pretty well. I get paid a dividend. I don't have much in it at all, but I mean, you can see my average cost is $41. I have been averaging up because this stock is continuing to go up. I think I bought it around here for, first off, like $35, and I've averaged up when it was in the 50 range. Yeah. I mean, this is a company that I see doing very good over all time. I mean, Cheesecake Factory as its brand is a very great company, and now that they're adding these new restaurant concepts that I'd compare to Chipotle or Olive Garden, I think these are going to overtake those old locations, and Cheesecake Factory has a nice future ahead of them, especially at a PE ratio of 14 right now. I think that they're definitely going to surpass that, and their market cap is very small compared to where it's going to be in the future. So yeah, I mean, this is a portfolio that I have to, in my opinion, outpace the S&P 500 and the market overall. I'm not shooting for a certain return. I'd say maybe 20% compounded, and let's see if I did this and invested $500 a month. Keeping a 20% compounding rate for 50 years is maybe impossible. I think Warren Buffett I think he's up there. But I mean, maybe like, let's say 20 years. I mean, even if you just do it for that, if you're only investing, that's $6,000 invested a year. In 20 years, it's 1.7 million. And let's see if you do the market return, which is 10. That 1.7 million is only 500,000. So it is more risky to invest in these singular companies. But if you enjoy the risk or you're fine with it, I mean, I'd take it. I know that it's definitely more sure of a thing to invest in those bigger stock ETFs because they don't fall as hard, but they also don't rise as high. And yeah, guys, that's all for today's video. So I hope you guys did enjoy it. I just wanted to kind of go over the portfolio and what stocks I'm buying right now and what positions I'm building, because this is a very interesting market right now. We don't know if we're going to crash. We don't know if this is a correction. We're going to find out very soon here, see if the S&P levels out, starts rising again, drops even more. So, but I mean, these are the times where you want to be cash heavy and invest in the market as much as you can. I mean, you got to take advantage of these. So I hope you guys do. And yeah, I'd be sure to like the video, subscribe to the channel, and also comment down below what you guys want to see next. And I appreciate you for watching. Peace.